All right, so I missed the New York Open trade. It was really ugly and everything. Now this trade I, you know, possibly missed. I saw it. All right, so what do we have here? This is one of the alternate entry models with entry methods within the model. All right, so we have the lunch low here, the lunch high here, and what happens if one of the rules are if the 50 macro starts here, see it? If the 50 macro starts and runs and takes a low or high, also you're incorporating the the draw liquidity. So I believe the draw is higher. I believe that midnight had occurred and price mostly been downhill since then, so I'm assuming it's going to go higher. That's why I was okay with if it would have been good longing. So price sweeps, if price sweeps a low during the 50 macro, that you can treat that as though it's the actual, that you can just now function as though it just crossed the low. So what happens, these lows here get taken, okay, after 50 starts, runs the low. Now we're waiting for a swing high, a swing low, then we're looking for a market structure shift that happens right here with the body close, this body here, okay, this is a breaker, the body, this one here closes. So right there we would have went over to I'm going to drop this to mark once this closed, I'm going to put it on this one because that's the open of that one. So I know that once this closed, right, this one here, this green candle here, once this closed, I'm waiting for price to drop down into a fair value gap. It occurred right there. Okay, we also see we have that dynamics of having 1, 2, 3. This is actually 4 fair value gaps all in a row. That's a sign of strength, and especially if price only goes into 1 or 2 of them and reverses off of it, there's a big chance it's going to be running away. So it comes into the first one here, comes into the second one, but doesn't close inside of it, comes out, just spikes in to about the consequent encroachment. Looks like it might be consequent encroachment, comes up. We're now waiting for the entry, a close above a down close candle. All of these down closes get closed. Well, all of them didn't. 3 of them got closed above. All you need is just one. But if it would have closed above this entire thing here, that would have been a nice, even stronger one. Closes here. This is the entry. So when this closes, entry. So let's mark that out. I am paying attention over here for like if M forms and we get a market structure shift to the downside, I will go for it, even though I will probably do 1-to-1 or 2-to-1. I mean on 1-to-2, 1-to-1 or 1-to-2, because I do feel like the RTH, there's an RTH high that is to the left side. I believe that's the draw, so I believe it's gonna go higher to that. So I'm not gonna I'm not gonna play with trying to go for a long run down. So we have all of this. Yeah, it's really, so that's, yeah, I'm not gonna really press for that. Coming over here, let me grab the tool, measurement tool here. Let me turn off the magnet. All right, so entry would have been here. I'm just going to slide over here some. All right, so that's the one that closed. Okay, and the stop loss would have been a 20. And actually, so you don't just set this automatic. When I first drop it, would have been 20, and this would have been so close that it's possible it could have got tapped out. You know what I'm saying? So you go below the low, the nearest low, if that's the next best thing. So that's what I would have done there. And then we have I just want to check and see if I'm being honest with myself, because this is, let me see, 1, 2. I think I would have put it below the third one, at least like this. I think I would have did that. So I just want to make sure I'm being honest with my own, statistics and stuff for myself. And then the take profit, I would have probably let it go to the lunch range high, definitely, but I would have been, now mind you, although I adjusted this, I would not have changed my take profit to be 60, 20, 40, 60. I wouldn't have changed that. Now I would have changed it if price got to my TP before it got to the lunch range high. So we see here that it's coming, and there goes 60. All right, but no, I would have let it just come to the lunch range high right here, and that would have been a quick win right there. Okay, so I also like to document the time, because we're taught to do that. How long did it take? Okay, so for this entry, it would have been here. So that would have been, and TP would have been this one right here. 4 minutes and 45 seconds is how long it would have taken. Of course, it wasn't actually a I'm sure it did hit 90 up there, because this is a 30. Okay, this is 30, 31, and so 93 would have been a 1 to 3, and so let me take a picture of this. Going short on a 2 minute, on a 1 minute market structure shift to the downside, following the rules here. It's not the best, because price didn't come out above. I was supposed to change this to let me change this now. If it came up to 0.5 or 1 and did it, I would be more comfortable with taking a short, temporary short. 60 seconds thing. This one, and it didn't get up to there. See, didn't get up to that. Almost. It did reject off of the last quarter, went to half of that. So right now, this is a technical entry here. High, low, lower, high. This is a technical high. This is a technical, which we wanted to close. So here it did come into a fair value gap. Now it just needs to, now all this is happening in that first quarter of the that first quarter right here. So it's not a good idea, and so I need it to close below an up close candle, and then that's the signal to actually short. Right now it's just not in a good spot. It's not, and this is also an ugly market structure shift. Talking about technicals, it did, but you dead smack into PD arrays that would have it go long. We have a bullish fair value gap here, buy side imbalance that may not be filled completely, or even if it does, it could fill it and then run. We have over here, we have this up close here that was supposed to be a bearish order block, because these two candles came up, took out a high and then dropped, confirming this is an order block. We have it now can be an inversion order block and now go long. So we have this here. We could look at it as this too, is a low, high, lower, low. This could be a breaker, you know. So price may be about to run up. Now price did come out, and it's best if it would have came up more, but it did come out sufficiently enough on the edge of me saying sufficiently. It came down to the 25, and now is making, now if it doesn't market structure shift to the long side, even though this should be, I should be looking for shorts because it swept the lunch high, so I'm supposed to be looking for a market shift to the downside. Right here would have been the entry right here because it closed below up close. Relative to this range here, this is a discount price, so it would have been better if it came up higher and then closed below 1. That would have been better, because now you can ride it down to, say, the first presentation fair value gap for 930. Just expect them like to come test it some more. I forgot to mark this one out. Well, if I did, it's just there it is. Yeah, that's a 1230 first presentation fair value gap. So we can expect it to come and touch that, you know. We're supposed to look at the time too, 126. So 30 is approaching. If price closes above the bodies here, this could be low, high, lower low. If it zooms up and closes up above there, that's a market structure shift to go long. Again, this would be a counter model trade. It's also, it would be an exit, you know. If I got in this already, the entry signal did happen here. If it did that, it would negate the trade for long. So that's a part of how the choices of going in the opposite direction happens too. You get stopped out or invalidated a trade, and you know. So I still feel it could come down to this 12 to give it another tap before going up. Yeah. So yeah, this is a very ugly market structure shift. It technically is, but no, I usually don't take things like this. It's just too much. We have a first presentation sitting right here. We have two first presentations sitting right here, and then we have the bottom quarter is right here. And price likes to come down after going in. It likes to come down to the first quarter of things and then turn around and go. So I would rather price spike down into here, and then give me again, I believe, let me see, this is the 15 minute, that's the one I want, the 15, let me close this up. I'm going to switch over to RTH here. Alright. Did we do it yet? Nope. What happened? Oh, I'm supposed to change it. Alright, so we have here, that's this high here. Let me clean it up. Okay, there. So this I feel is the draw. We have all this empty space here, this Civi also, but I believe this is the draw right here. So let's move down. We have this little fair value gap got covered there. Right now it's almost dead smack in the middle of this here. This is a 15 minute. I can come over here and drop. Let me bring back the magnet. Oops, dang, that's a uh-oh. That 15 minute just opened. So there's a chance that it may be going up. And then come grab this and just pull it out. there and then switch it to a regular one. The blue is for first presentations and things like that. Specialty items. Alright, so if I was to divide this, it's almost supposed to, the 50% might be. So this is a 15-minute bullish order block. So over here. So we'll see if it consolidates here a bit and then continue higher or not. It could be about to form a large, so meaning like the day might be done, and just for the rest of the day it'll just consolidate but drop slowly and create a second leg over here, you know, and then go up. That's possible as well. So I am paying attention to the price action here. Again, I would rather go long. So for this move here, where we have a low, a high, a lower low, we have some spike in here. Then this here, I would have I'm looking here at this breaker, and usually when there's a fair value gap lower than it, which it does come into it, then it can have a longer drop. So here's where you would, you know, come in and get closer. It's almost, you know, has a chance to close. This here's a valid swing low. High, we got a new candle just started, and if it closes above this, we get in. Although this too looks like a preparation of a you know, of a W forming here to then go long. Look at the time is 1:30, so that's a shift in the time. So right there, see that? So this is 120, 130. 130 came down, dropped, and now is running higher. A 16-second layer. So we get ready to come over here. 10, 9, 8. We bring up the trading screen. Get ready to buy the market. Okay, we got a closure and it's running. We need it to drop down into a fair value gap. We're over here now. Come on, drop down. Drop some more. Come on, come on. I see a little volume imbalance here. Those two I can get in if it hits that and then goes up. Patience comes in at a lot of times around this time. It wants to run. Did it hit it? No, it hit that. Looks like it could have. Dude looking like they don't want to give me any play. Over here, they come into it here. This fair value gap here. So going long, we wait for a close above a down close, which happened here. That's one time it happened. Okay, there we go. Okay, we tapped. Yep, we went into this fair value gap right there. So now we can go long. If if we get a close above that. It's still relative to that range. It's still, you know, buying at a premium price relative to this range here, which I don't really like. So I would like it to come down a little more, but we have this structure here. So once we get a close above a down close, that's it. I'm just gonna go in.
Order canceled. Order submitted.
All right, so yeah, so this yeah, this account got shut down probably because did I hit 2,000 over the thing? No, this was supposed to be started. So let me go check the price, see what's going on. Oh. Yeah, so yeah, that account got breached yesterday. Yesterday's trade, that last trade that I had taken, not following the rules. So yeah, so I couldn't trade that. You know, couldn't trade that. So let's come over here. All right, let's take this off. All right, so we can see that, let's see, where was it? It was this one here, right? Let me see. It's the down close. I think I got it. I would have gotten here, and I would have had. So automatically, I can see that. Again, this is why I like it to come down lower, because now my entry would have been here. But I had to choose now a larger stop loss than the automatic 20 that happened. So with the automatic 20, if I would have just left with that 20, you could see that I would have gotten stopped out. So I think I would have selected this. The first quarter, it would have been the right thing to do, but I would just pick below this structure here. I'm gonna just pick this, which is the top of that. Alright, so alright, and this is in the proper direction, so to be honest with myself, I would have selected to let it ride to the do the whole 3, or at least go to the TP that I'm expecting, that high, that RTH high, over here. Let me clear it. Yeah, so this high here is where I would have been wanting it to go to, and so did I put? Oh, I already put it down. Cleared the screen. Okay, so again, that would have been the stop loss, and to take profit would have been 60 right there. That's the normal one. Just doing. Again, I wouldn't have. This is not technically, 1 to 3, because I extended this down. Let's see over here. It's NFP week, so more than likely I probably would have chickened out and just still took it at the 60. But I gotta actually learn how to take partials off of the what do you call it, off of the NinjaTrader and leave runners. You know, I gotta figure that out. All right, let me get this here. Put this right. We put the magnet back on. There. Hold shift. So 60 is very close to happening. Stop loss would have been broken to break even on 40, 1 to 2. Let me see if I would have got out. So what I do sometimes is if my exit is right above, like right here, this little high, I might adjust it to that high, or just manually take it out, bring it down to that high, because remember, when I entered in over here, it would have went straight there. But I strongly believe it's coming up here, and it's so close to this high, more than likely I would have just left it. But right now it would be at break even right here. You can see how close it came to 60. You see that? But you see that it did hit this high here. Yeah, so I would have brought this here right to that high right there. Or took in partials or something, Alright, so that's it. I'm gonna just let it ride. 130. Also, 130 is said to act like the 930, so I'm going to mark out the first presentation for 130. Oops, that's supposed to be done over here on this one. Alright, let's locate that first presentation from 130. And I believe it's dead smack right there. This is 131, and that's it right there. So here, what I do sometimes also, sometimes if I see that my break even is very close to the first presentation, I might bring it. That's if this was like real close, but it's not. It's actually that was the stop loss, for the entry here was the first presentation. So I also need to remember that if I get a M1 market structure shift, then I pull out also. So if this comes up, if this creates a market structure shift to the downside, then I get out at whatever profit I have. Presentation fair value gap. So just to recap, this trade would have been a counter. It's not counter trend because this is the trend, and we're about to taking profit. That is so funny. You see that? He didn't take it. Nope. I would probably pulled out by then. But anyway, you already know I would have got out over here. This would have been a successful trade, but I like, because I didn't say it prior to that. You know, you just want to. I want to see it. I want to see it hit this so that it at least covers the fact that I didn't say it in the beginning. But right here, yeah, it came right to it. But there's a you know, there's a tick or two spread, so it wouldn't did it. So now right now, if it closes underneath here, unfortunately the break even is so close that if it chose to come all the way down and close, it might choose to run. The time now is 148. It's 148, so it may be about ready to you know, it could decide to do that, you know, make a big run, because it's almost a 50 macro, and they could want to just consolidate in between the high here and the low here. What I also do is, which I'm forgetting to do at this moment, so this is the actual lunch high and the lunch low, but then I didn't put out the projection is there, right? Where's the projection? Yeah, the projection is there. Yeah, so the projection is there. We didn't get there yet, but current price, I need to get it put. Okay, this is the static one, so this is just, you know, the static one. This is the projection one. And I could just use this actually. Let me see. Yeah, I'm gonna just use this one here. Take this out. Hold shift and pull this up. Alright, so this lets me know that this is the first quarter of the full range from lunch range to wherever price is now. So this lets me know that this could become a W, you know, where it goes boom, 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 go like that. But this here is officially, if it closes beneath here, this is officially a signal to get out. It doesn't have to actually, you know, it could still work out. The whole entire plan could still work out. It could still go up to here. This is where I expect it to go. But if I'm following rules, if it closes, if it does a market structure shift in M1, I'm supposed to be closing out the trade. Time now is 151. This would be nice for price to actually run fast and take out the highs, even this one, and then if it wants to then turn around and drop and get ahead. But a lot of times we have a fair value gap sitting right here. We have this large structure here, and we have a sweep low here. A lot of times the 50 would do a start run if it's not, you know, so close up to get into its target, the algorithm's target. So this at 25, even though this is not this 25, the 25% of the, you know, fixed, you know, static lunch range. This here, when you get a W within the 25, then you have you can see here See, get it now. Yeah, it hit it now. You can see it just hit it. So this would be a success even for just striking it. Went into there good enough that that would have triggered it, in my opinion. So now anyway, we get a close above this here. It didn't though just now, so that's like, oh man. But if we get a close above here, that's good for the run up there. Well, you guys heard me try to get into the trade, but that eval I had actually blown. I didn't realize that I blown it. So that eval is done until I think that one's the 7th. So anyway, you gotta read the contract, complete the contract, sign it, and start with the I'm not gonna speed things up. I'm gonna when I actually finish up here, I am gonna get to it and work on that. Work on finishing up that contract. So the extended take profit, so did this trade panned out already? We know from what, just straight following the rules, but this is the intended target here. What I do sometimes, I just for visual effects, I'll take the magnet off. I just drop another one here. That's 96 there. So at 60 handles, and with NQ, you're looking at $2 for the NQ, just a micro 2, right? I'm charting micros just so you guys know it's micros. The E-mini micros I'm doing, and so that's $2. So that's 60 times 2. That would be 120, and then that would be 120 times 12 contracts. That's what I tried to do. So that's $120. So yeah, 1440 here. Yeah, that would have been 1,440. And my loss from Asia, New Day loss. Those 2 that I got, I violated my rules. The total was $1,323 that I had lost. So this one trade, and that was 2 trades I took to lose that. But this one trade here would have recovered all of that. And that's not including, it getting to the target right now, like it just did. The deeper target. So, yeah, that's 96. So, if we would have waited for it to go there, that's 96 times 2. That would have been 192 times 12. That would have been 2,304. So that would have been a nice recovery. And if I would have went all the way to the spot that I expected to go to, then that would have been an even larger win. Would have got exactly, that would have been 1,000 above. That would have been, I believe that would have passed the exam. Nah, that would have brought me that would brought me back to like 1/4. Well, actually, you know what I have found out? I remembered later that it actually takes what do you call it? It's actually what do you call it? 3,000 to pass the static, the rhythmic static. It's 3,000 to pass it. So I'd have been a little above half. I'll just round to half. I'd have been halfway done, which I have been halfway done in the past. So not a big deal. All right, so that's it with commentary for the lunch range move. You see that price did sweep and take the lunch high, but we saw that it did not give a proper structured entry. We knew that the draw liquidity was up above, so we didn't play getting in here to go down low, to go short. If we did, we would have had to play it real tight, and you know, we would have had to you know, get out, and they probably have won. Let me see, above to here, we got it somewhere around here, there. Yeah, we could have got a 1-to-1, I believe. We could have probably squeezed a 1-to-1 out of there, but that wasn't what we were trying to do, because we're playing heavy. We were putting heavy contract sizes on relative to the account anyway. So instead we got in after the low, high, lower low, close above. We saw that it was rejecting on the which one was that? Yeah, so we see that it came down to nearly the last quarter, but still near half of this structure here, and it just went up. It just worked out. Everything just, you know, it just worked out. Stop loss was would have came very close, but no cigar, and we ran up and ran up. So this would have been counter model, but for a cancellation. Same way right here, I would have to cancel out if price dropped below here, making an M1 market structure shift. I would have had to close out the trade. If I did trade down and was trying to wait and hold for 1 to 3, once price closed above here, this is ugly as well, but this is ugly and in the direction that the draw on liquidity is. So this one, yes, take this one. It's bouncing off of the 9:30 first presentation fair value gap. The time is 30, so it's happening at 30, where 30, you know, where price is coming in a particular direction. You hit 30, sometimes 10 and 50s, they'll then shift the other direction. So the timing was right for this. The point of interest being the first presentation fair value gap, 9:30 a.m., the opening one, which is a very strong one, I believe. And then it even over here had even created within that, it created the 130 first presentation fair value gap was created as well. So this is a strong support area, and price went. But if I was shorting, then I would have been taking yeah, this was the breaker, low, high, lower, lower, low. I believe that's what this structure is the breaker. Anyway, for long, so we had a lot of long PD arrays, and they did it. So we see that we would at least got the 1 to the 3, and not least, we actually got all the way to the target, which was the you know, that last high over here, right here. So we ran all through that. That was the target right there. All right, that's it. Beautiful work. We'll do the screenshot and everything and be done.